Hey everybody, Smart Silver Stacker here. Welcome to another live stream. We've got a very exciting move in the price of the precious metals today. Going to cover what is driving this surging price of gold and silver that we're witnessing, and really just commodities across the board. And it's all on the back of a falling US dollar. So we're going to talk about what is driving this decline in the US dollar index, what's driving gold and silver higher, and why I think we are right around the corner from new record high prices in these metals. So first of all, here's the chart for silver. You can see now this is the December contract for silver, up over 25 bucks, up about 1.3%. The move in gold even more notable today, up 1.53%. December gold now up to $2,043. And really, I mean, it's up 30 bucks today. If we go up another 30 bucks, we'll be within striking distance of a new all-time high in the price of gold. And anybody who's been following this channel, anybody who watches what's going on, it's really no surprise that the US dollar is falling here. Certainly, we've been getting set up for this for some time, but we're going to take a look at some charts and also what the Fed just said, and just examine where this move is going to go from here. You know, is this a head fake? Are we going to see a correction in the price of gold and silver? Anything's possible, but I really do think that we are on the verge of new all-time highs, first in gold and then very likely in silver. And I'm going to tell you why as we go through this live stream. And do just want to say a big thank you for everybody who is tuning into the live stream. Do me a favor, smash that like button, put a 1 in the chat. Fire up that algorithm, and also just let me know that you can hear me loud and clear. All right, so first of all, you want to get your hands on some gold and silver. Still, even though the price has moved up, check out sdbullion.com. They got some Cyber Week sales going on. You can get a gold Krugerrand $39.99 over spot, any quantity. They got a deal where you can get a free Silver Eagle with a tube of Silver Britannias. So certainly, even though the price of gold and silver are up, if you want to get some more, that's the place to do it. Now, first up, U.S. debt, $33.833 trillion. I mean, this is the reason that we know in the long term the U.S. dollar is going lower. I'm not going to dwell on this too long, but it is notable that we are now over $33.8 trillion, and ultimately a debt of this magnitude can only be paid in devalued currency. But all of you know that already, so let's move on. Hello, Constitutional Stacker. Thank you for the super chat there, sir. Thanks for everybody who is tuning in. Now, here's the chart of the US dollar index from MarketWatch, and this is the one-day chart. You can see pretty sharp decline. I mean, a 0.42% decline. That's a big move in the world's biggest Forex market. And if we zoom this out to, let's say, the 3-month chart, this is not looking like a real strong chart to me. I mean, there's a clear downtrend in effect here, so I think we are going to be heading lower. You know, there's going to be volatility certainly as we move forward, but the long-term trend, I believe, now is downward. And I want to talk about what is driving this decline in the price, well, in the value of the dollar relative to other currencies. A lot of it has to do with this guy, Fed Reserve Governor Christopher Waller, who tells us today a bit of a dovish tone compared to what we've been hearing from many of these Fed governors. And this looks like it was actually the catalyst that drove the dollar lower. Now, what did he tell us today? Well, he tells us that he's increasingly confident that the Fed's interest rate policies will succeed in bringing inflation down to the central bank's 2% target level. So he thinks interest rates are already high enough. Already, you know, it was at the last FOMC meeting that Powell was telling us that we were probably going to get another rate hike at some point this year. But I mean, that looks like it's out the window. The December meeting, I don't think there's a chance that they're going to hike there. And there are reasons for this that we're going to discuss as we move forward here. But let's look at exactly what Waller said here. Increasingly confident that policy is currently well positioned to slow the economy and get inflation back to 2%. This was at a speech at the American Enterprise Institute. And in a Q&A session afterwards, Waller even opened the door to the possibility that the Fed could cut its short-term interest rate in the coming months. Now, it's very interesting that the Fed is taking on this more dovish tone. I mean, look at the CPI. You know, it's still over 3%, nowhere near the Fed's 2% target rate. Real inflation is still far in excess of that 2% target. So why is the Fed talking about cutting? Well, let's talk about that, because there is a very compelling reason for the Fed to be sending some dovish signals to this market. And it all has to do with the collapse of the economy that is being driven by constrictive monetary policy. Look at this headline. PNC Bank announces closure of 19 branches across multiple states by February 2024. That doesn't sound good. Chase Bank confirms it is closing 24 branches over the 3-month bloodbath. But they have some good news. Yeah, they always want to spin these stories to make it sound like, no, it's good news that these banks are closing down and that, large portions of people will no longer have access to a physical bank branch. Why would they be doing this? Well, one reason is because, it's possible that these branches are no longer profitable for the banks to operate. Also, these banks are becoming insolvent increasingly as time goes by. I mean, it was just a couple weeks ago that we had the 5th bank of 2023 fail. Now we're seeing many of these big banks closing branches across the country. Wells Fargo, another 13 branches closed in a single week as a host of banks shut down vital services. PNC closing 19 branches nationwide. This is from a local news network. I might have already covered that one just a moment ago. But look, the point is these banks are coming under a tremendous amount of pressure. You want further evidence of that? The Fed's bank term funding program, the emergency lending facility beginning in March to take off some of these low-yielding, devalued treasuries off the bank's balance sheets that's causing them to all become insolvent, keeps hitting new record highs, $114 billion. And here's the reality, folks. When you have a debt-addicted economy, and I don't think that that's an exaggeration to say our economy is addicted to debt. We have a debt-based economy. Monetary policy was feeding that addiction for a decade plus, close to 0% interest rates. Now that the Fed is hiking to bring inflation under control, the banks are failing. I mean, it's that simple. And they know that there's only so far they can push this thing before the whole house of cards come crashing down. I mean, the Feds, they've really got one tool to stimulate things. It's the printing press. So, when they start floating out ideas that cuts are around the corner, yeah, cuts are probably around the corner out of necessity. And it looks like the Fed is beginning to acknowledge that, and they're getting people ready. Another reason why I think some of these banks might be closing so many branches, it's a lot tougher when you have to shut down and have a bank holiday or there's a bank run for your customers to complain or to access their funds when there's no physical branch. I mean, when all you can do is go to a website, all you can do is call customer service, and, it's going to make it a lot easier for them to get through the collapse, which, it's not guaranteed, but it's looking increasingly likely. But who knows? I mean, maybe the Fed will avert a massive financial crisis. Maybe what Waller's telling us here is that cuts are going to be around the corner. Now, if they do that, they might actually get ahead of this thing. But it is going to drive the value of the U.S. dollar much lower. I mean, they're going to have to print a lot of money to bail these insolvent banks out. So, gold and silver, I believe, are headed much higher. Now, let's take a look at some charts. This is the long-term chart of gold. And, it's a similar story with silver, but the signals are a little bit more clear on the gold chart. So this is what I want to take a look at. And you can see this is a massive cup and handle formation here since the 2011 highs. We're in the midst of the handle here. We've got $2,100 seems to be the level. I think the actual nominal all-time high intraday is just under 2,100. I think the highest close for gold is what, 2,085? If you know it, put it in the chat. But we've tested this level of 2,100 3 times now, back in 2020 and then twice since then. We're getting very close to approaching this again. I mean, literally, if we get maybe 2 more moves like we saw today, we will be above $2,100. And I'm not a, technical analyst whiz or anything, but a cup and handle like this is a very bullish formation. And when we break above this trend line here that we've tested 3 times, the price of gold is going to move very rapidly. And, first we're going to hit a new all-time record high. That'll be above 2,100. Then I think we're going to hit a new all-time inflation-adjusted high. In fact, if you do the math, the inflation-adjusted all-time high for gold, you go back to 1980 when gold hit about $850. You adjust that for inflation, and you get a price of about $3,300, $3,400. Mind you, that's just using the CPI. So the real inflation-adjusted all-time high is even higher than that. But if you look at this chart and you kind of do the math, the way you want to figure out how high gold could go once it breaks above this is you take the difference between the bottom of the bowl here, the top of this handle formation, which is a difference of about $1,000, and you add that to the top here. So that would give you a target price of about $3,100 in gold for a breakout above this $2,100 level. And it's very similar to the inflation-adjusted all-time high. So, I mean, I'm thinking when we get a close above $2,100 over the period of months, maybe a year or so, we're going to be heading to $3,000 plus gold. Just my forecast, but the charts seem to bear it out. And certainly, there's a lot of money printing on the way. So $3,000 gold, I think, is probably a conservative estimate. Now, here's another chart, the Dow-to-Gold ratio. This is an important one. This is probably the most important chart of all for gold, if you ask me, the Dow-to-Gold ratio. So this is the ratio of the price of the Dow Jones Industrial Average relative to the price of gold. Basically, how many ounces of gold does it take to buy a share of the Dow? And right now, we're up around 17, 16, around that level, kind of near the highs. It did hit a very high level back in 2000. This was during like the dot-com stock bubble, hit about 40, and certainly that was a great time to buy gold. I mean, gold was like $250 back then. I mean, anybody who bought gold in 2000 has done very well for themselves since that time, especially if they were smart enough to sell in 2011 when it dropped. But that's the thing I want to draw your attention to. This is a cyclical pattern, and there's two big declines here. Back in 1932, this hit a bottom of just under 2. Okay, so this is basically in the Depression. Remember, at this time, gold was pegged at $35 an ounce. So what this was caused by was a deflationary collapse of stocks and paper assets. So at one point, you could get a share of the Dow for just over an ounce of gold. Now, in 1980, and I like talking about gold in 1980, because you ever talk about silver in 1980, and everybody just wants to say, oh, the Hunt brothers, the Hunt brothers. Well, there's no Hunt brothers manipulating the gold market in 1980, so clearly there is more at play here. But in 1980, gold hit the all-time high, still the all-time high if you adjust for inflation. It was in January, and you can see that the ratio, I think on an intraday basis, it went to just about 1, meaning there was a day where you could sell an ounce of gold and buy a share of the Dow. And I mean, you would need a very high gold price for that to happen today. But it's interesting, this one was different than in the 1930s. So in the 1930s, it was a deflationary collapse in the price of stocks that drove the gold to Dow ratio, the Dow to gold ratio lower. But in 1980, it was the inflationary decade of the 70s, which kept driving gold higher relative to paper assets. Well, I think what we're on the verge of is we're going to see a little bit of a combination of both. We're going to see a deflationary or stagflationary collapse where you have paper assets that are addicted to, record low interest rates. They had this huge bubble inflated over the past decade plus. You're going to see them coming down, and at the same time, you're going to see inflation driving the price of gold much higher. So, are we going to see 1-to-1 on the Dow to gold ratio again? I think it's highly possible, and that's why I'm still looking to add to positions in gold. I mean, I'm probably not going to buy any today. I don't like to buy on days when the price is surging, but if we get a little bit of a pullback here, which is always possible after a big move up, and gold and silver have been on a nice run, I will definitely be stacking some more. And, if you want to talk about silver, I mean, silver is still very, very cheap, even at $25. So I would consider stacking some silver at today's prices. And, none of this is financial advice. Look, I know people in the chat are going to say, oh, gold and silver, they're going to come back down. Every time it goes up, it comes back down. Like, yeah, you can expect volatility. But I don't know how many people out there are actually shorting gold and silver at these prices. I mean, yeah, they've been on a nice rip, but they could go a lot higher. And when I look at this chart for gold, I would be very hesitant to be shorting gold at this level. But let me know what you think in the comments down below. Let me know where you think the price of gold and silver are heading, because my forecast is they're heading much higher. That's it for today, everybody. Stay safe and happy stacking. Expect more Fed capitulation moving forward, and I think we're going to see more big days like this in the price of gold and silver very soon. Stay safe and happy stacking, everybody. Smart Silver Stacker out.